Hello, friends. Welcome to Weekend Investing Daily Bites. We are shooting episode 300 today. It's a remarkable journey that we started these daily bites last year, and we've gone through now. This is the 300th episode. I still can't believe it that we've been able to manage so many episodes and with so much appreciation and feedback from all of you. Very encouraging to keep doing this. It also shares knowledge. It also enhances my learnings when we start preparing for each topic, and it keeps us connected with our audience, with the markets, and the benefits are plenty. So today we are going to talk about how banks are stealing the show, and should we allocate to banks, and how are we allocated to banks. We are currently at a very delicate crossroad where Nifty has almost come back to its all-time high, and the monetary policy is seemingly almost done in the interest rate cycle on the higher side for now. And tonight is the big Fed meet, and if that Fed meet projects a pivotal point that maybe there is some commentary that they will not be raising so hard going forth, and if they have some some time frame beyond which they will not raise, because already there are issues in several European countries, even in the US Parliament there is opposition from the other parties regarding this incessant rise of interest rates, whereas inflation is not yet budged. So the policy makers are in a trap, and if they give an indication that they will not raise at least for some time, I think the markets can take off to a new level. India is very sweetly poised at its all-time high. There may be some sell-on news initially, but then eventually I am expecting that the markets will go to an all-time high before the year is out. So I am pretty positive on the market right now, unless there is some negative outcome, or or we may find that the Fed is going even more hawkish here on. Then that may be a temporary blip, but other than that, everything is pointing towards an all-time high on the Nifty. Also, the domestic flows have been good, and FII flows have now seemingly turned positive again. Most of them actually are momentum investors, to be very frank. So you would have seen that when markets are falling, FIIs are dumping, and when markets are rising, FIIs are adding heavily. So many of them are chasing the market as a momentum investor does, and a lot of index buying is also happening on the way up. Today the market, you saw the metals go up 0.6%, pharma up 0.5%, Sun Pharma very good numbers and prospective future. But there was a lot of sectors where some profit taking came about, especially ahead of this crucial meet. So consumption stocks down 1%, real estate stocks, PSU banks down 0.8%, autos down 0.7%, IT, infra, private banks all down 0.5% or so. Nifty itself down 0.3%. It kept on going sideways during the day and slightly on the lower side. And this important event actually is causing jitters amongst the bulls. Overall, however, on a weekly or a monthly basis, the market still is reasonably strong in terms of the sectors. Across the broader indices, as has been the case in the last many days, small caps continue to reel down, not participating much, so only 0.14% up. Nifty Next 50 was the stronger one at plus 1.02% up, and Nifty, I'm sorry, this data doesn't seem right. I think this we have, okay, so ignore this data. I think this data is correct of the weekend investing strategies. So MI20 doing very well at 0.89, MI35 up 0.28%, NG 50/50 up 0.07%, MI25 flat, and these NNF10 and MI-ATH2 and ATH lost some ground here today. I'm sorry about this broader indices data. We'll update it and send it on the Telegram channel. Heat map for the day, you can see there is considerable red on the screen. State Bank losing 0.5%, Bajaj Finance, Axis Bank, Infosys, TCS, Asian Paints, Maruti, Titan, Bharti Airtel, Levers, Britannia, Nestle, L&T, Asian Paints, Eicher Motors, all losing some ground. Only green I can see is Hindalco here, some on Sun Pharma, slight gains on ITC, ONGC, Reliance, and Tech Mahindra. Gainers, Mazagon Dock plus 13%. This has been one of the popular stocks in many of our portfolios also. Reddington up 7.6% after the good results. Sharda Crop up 7%. Fine Organics after the recent beating plus 6%. Aster DM Health up 6%. In terms of losers, LIC Housing Finance down 8.5%. Chambal Fertilizer post results down 5.5%. Infib Avenue down 4%. Devyani International down 3.5% along with Kansai Nerolac. This is the sectoral ranking. I have put up this chart several times and this is now updated for 31st of October. You can see one thing very, very clearly, that PSU banks have remained the strongest sector in this last 1 year. So over a 12-month basis, they are ranked number 1, 9-month basis they are number 2, 6-month basis they are number 1, 3-month basis number 1. And so you can see that there is a very clear trend here. Autos, which were over a year, have done well, but over the past 3 months and the past 1 month have slipped a bit. FMCG have slipped a lot recently over the last 1 month. Metal stocks have made a comeback in the last few months. Public sector enterprises have made a comeback in the last few months. And also some very clear indication that real estate really did not make any big move. Media has remained very, very poor. Pharma did come back up till some months back, but this month it has slumped again. Financial services in general have improved. Consumption stocks have slumped this month along with FMCG. So see, these are some of the sort of bigger sort of trends that you can see in this sectoral momentum chart. But what is very, very evident is that banks are stealing the show. So these, most of these are PSU banks: Union Bank, Bank of India, Bank of Baroda, Canara Bank and Indian Bank. These are the 4 banks that have really taken off in this last couple of months, up 40, 50, 60, 70%. And then Karur Vaisya, of course, is up dramatically. And of course, this is compared with the overall market. So you can see that the rise has been great. And many of these are actually in our portfolio now. So at different levels, different stocks have got picked up. And you can see very clearly that versus the private banking, this blue line is the private banking, which has not gone anywhere since last 1 year. You know, last November we were here and this November we are also here. But last November PSU banks were here and now we are here. So PSU banks have definitely done very well versus private banks. And so that's the outperformance that we are also seeing in the sectoral momentum table that I showed you. This is again, I think, the same chart. Some sectors that have been lagging. So FMCG has really come down. So levers, you can see suddenly in the last month underperforming. Bombay Dyeing underperforming. Welspun Corporation minus 25% underperforming. So some of these stocks have recently in the last few months moved out of our portfolios, and these were the examples of losing momentum on these stocks. So momentum automatically is picking the the sectors where the strength is there. So which is currently PSU Bank. So some of our picks in several of our portfolios are PSU banks. So you don't really have to predict or guess, what to buy, what to sell. That is all being the algo is working towards that, and it will tell you in due course. You may be late sometimes, you may be early sometimes. That's okay. But overall, I mean, if the underlying strategy is a self-correcting strategy, it will not let you be in a wrong sector for too long. the momentum automatically gets out of lagging sectors. So currently, real estate, FMCG, and consumption were lagging a bit. Again, momentum may not give you astronomical returns, but it certainly help your portfolio stick with the trends. Exit winners early and ride winners. Exit losers early, sorry, and ride winners. And most importantly, it will help you sleep peacefully. So that's the sort of the pitch for the momentum investing style of investing. A lot of people are still not convinced, so we keep telling you what momentum investing can do and show you with real portfolios how momentum investing has been so successful. And also, please do remember that when banks are performing, usually the banks are leading the rally in any economy. So I personally feel that whenever banks are performing very well, that is a very sort of good sign that the economy is doing well, and usually the rest of the markets follows that lead. So with that good thought, I am wishing all of us a great Fed meet tonight, and let's hope everything goes well and we continue this path of our all-time high onto the next week and next month.